Okay. All right, so we begin now a short course in managerial economics. As I was explaining a little earlier, we'll try to cover the following 8 chapters. Chapter 19, Managerial Accounting. 20, Job Order Costing. Process Costing is chapter 21. Then we have midterm, okay? And after that, we're going to cover, as I explained, only half of chapter 24, half of chapter 25, and half of chapter 26. For everyone, you can now, let's see camera, and you can zoom in. Can you zoom in nice and well? The textbook, and make sure you zoom in very well on the authors. We're going to be using Principles of Accounting by authors called Wagon. This is the most popular textbook in accounting, right? Camera fun, right? Okay, you got it? Okay.
Yeah.
All right. So we're going to be using this textbook, and I have prepared for you only maybe 6 or 7 slides from chapter 1, and then we're going to cover from chapter 19, Managerial Accounting, only the introduction part. So, a quick overview and a reminder. This is just a simple introduction before we get the real thing. Let's see, you said F5. So, I'll be using the slides from from the 10th edition. And this is a simple reminder of what accounting is all about from chapter 1. This is what the chapter looks like. I'll only cover the first section, which is what is accounting. You all study principles, right? Financial accounting. You all took one course, right? Yeah. Okay, so basically the activities of accounting and who uses accounting data. Okay? And what is the purpose? What do we do accounting for? What's the goal of accounting? The goal of accounting is you want to identify, you want to record and communicate economic events. In other words, you want to communicate things which are important, for an organization. The organization could be a coffee shop, it could be university, it could be a restaurant, could be a hotel, could be business, right? And you report it to interested users, okay? And now we get to the users in a minute. So, accounting is about identifying, recording, and communicating. You know, communicate means people want to know, are we making money? Are we profitable? Okay? How much money are we making? Which products sell well and which products don't sell well? This is all information. We use this information to make decisions. Everything in business is about making decisions, okay? And accounting is about information to help make decisions. All right, the 3 activities, you see them on a nice picture, is the economic events. So you need to decide what's important, what's not important. A customer walk in the shop. Are you going to record it or not? The answer is, if they actually buy the product, you'll record it. And if they don't buy anything, you don't record it, okay? Customer come in the hotel, say, how much the hotel for one night? And you say, 500. If he says, I'll check in and pays, then you record it. If he walks away, nothing. Then you need to record it. The recording part means you gotta record it, you gotta classify it. If it's a cost, what kind of cost, okay? And somehow you need to summarize it. So information is about summarizing. Summarizing means today our restaurant has 312 customers, okay? And we have a revenue of 40,000 baht, and we make a profit of 10,000 baht in one day. Okay? So that's a short summary. Another summary is we have 9, 15, 17, 18, 19, 22 students. So a short summary is we have 22 students in class. Okay? So that's a simple summary. And you need somehow to communicate it. And communicate it for users. You also need to interpret. 10,000 profit. Is this good or is it bad? Okay. All right. So you need to understand and make a meaning. Is this a good thing? Is it? It's like 22 students. Is this good or not good? Well, it depends, right? But you need to interpret. You need to communicate. So that's accounting. Now this is the other more important part, which basically tells you who the users are. And the users we divided into two. The blue guys we call internal users. These are the users inside the business, okay? They make decisions for the business. These are management, okay? Management will decide whether to raise the price, lower the price, open sooner, open later, make a discount, not make a discount, offer a new second type of coffee and a third type of coffee, okay? So management makes decision to hire a person. Oh, we can raise his salary, right? Right? Raise his salary, or, well, we don't need you, you have to go home, right? So, management makes many decisions, okay? You also have human resources, and the human resources I already mentioned. We're going to raise your salary, and we don't need you. Now we're going to be working for 2 people, okay? So instead of paying you 10,000 and 10,000, we're going to pay you 14,000, and you go home. We save 6,000. You're going to work harder and get more salary, okay? Next one, finance. Finance will ask questions. Do we have enough money in the bank? How much money we have? Oh, we have a loan. Do we have enough money to pay back the loan? So finance has a lot of important questions. And marketing. Marketing will ask questions. Is the price big enough? Can we charge more? Or, well, can we have a sale, promotion, or discount? Okay. So all of these questions are used by the managers. We call these insiders, and we call it for internal use, inside the business. And then you have outsiders. Outsiders will be investors. Investors want to know, is this company good? Is it making profit? Should I invest in it? Okay. Then you have labor unions. Labor unions also want to know, is the company good? Can we raise the salary for workers? Okay. So labor unions want to have information. We also have creditors, the bank. The bank wants to know, is this business good? Should we lend them money or not lend them money? Okay. If we lend them 1 million baht, can they pay back? Or how much can we, go in. How much money we can lend them and they can pay back, okay? So, they want to know this information. These are regulators. That's also important. Well, sometimes customers want to know. Customers want to know if the company is good, and if the company will be around. If you buy a mobile, they say 1 year guarantee. Well, you want to know, is the company going to be after 1 year here to take care of the guarantee, of the warranty, okay? Same thing for a car. A car will have a 3-year warranty, okay? Well, you don't want the car business go bankrupt, and then you don't have warranty, and you don't have parts, okay? So customers want to know. And IRS will be the government for taxes. The government wants to know, is this business making money, and what kind of tax we can take from that, okay? Governments always want to make or take more money from business. So governments want to have a very good information. So all of this information, accounting data, serves different people. These we call internal users in blue, and these we call external users. Oh yeah, they have it here. External users, and far out there is internal users. Okay? So, when you studied last semester financial accounting serves external users. So when you study financial accounting, it is for all of these users here in the white. For this course, over the next couple of months, we will study accounting for management, and we call it for managerial purposes. And the main managerial purpose is to make decisions. Okay. Now, for a business, the main purpose of a business is what? What's the goal? Make money or profit. Wow, you're good students. Yes, the main goal of any business is to make money, to maximize profits, to make as big profit as possible. Well, that's the goal. And in order to do that, you need to make good decisions. Managerial accounting is about providing the correct information to make good decisions. Okay, let's see what's next. 1 or 2 more slides. Okay, well, they clarified internal users, the blue, external users, the white. I already did that one. Let's see what else we got. Okay, well, here it is. Let me move this table a little bit. All right. Number 1 is question from human resources. Can we raise salaries? Okay. Can we raise salaries? Can we hire a new person? That's number 1. Number 2, does the company earn enough income, or does it make a good profit? No. This is all, again, who uses it? And I think they have here on the slide, like this, yes, human resources. You zoom in nicely. Yeah? So, human resources uses the information to see if we can increase salaries or not. Okay? Let's see. Company earn enough income. Yes. Investors want to know, is the company profitable? Is it making enough profit? Do we need to borrow in the near future? Well, this is going to be the company. The finance department want to know, are we going to have enough money, or are we going to need more? Do we need to borrow, or we don't need to borrow? That's the finance department. In general, management wants to know, are we going to run out of money? Okay? If you run out of money, you're in trouble. At the end of the month, you students, you run out of money? No. Always. So, you know what it is to run out of money, okay? Well, you may run your life out of money, but you can't run a business without money. You know, you still got to pay salary, you still got to do a lot of things, you still got to pay the electricity. So businesses can't afford to run out of money. What's next? Is cash sufficient to pay dividends to the stockholder? So do we have enough money to pay back to investors? Let's see what it is. Is this again investors? Yes, finance. For marketing, what price for our product will maximize our income? Should we raise the price or should we lower the price? We can raise the price, we can get more per product, but we're going to lose customers. Or maybe we lower the price and gain a lot more customers. Again, this is what marketing will want to know. And will the company be able to pay its short-term debts? Well, again, management will want to know, the finance department will want to know, and the bank, the lenders will want to know. We call these creditors. So the creditors want to know this. Okay, creditors. All right, and that's the basic introduction to general accounting. Now we're going to go through a short introduction of managerial. All right, so now we switch the PowerPoint slide to, let me see, how does it work like that? Oh, okay. This is, which chapter is this one? No, this is chapter 1. Now we go through chapter 19. So, now we are moving to chapter 19. And we got a lot of goals over here. I'll try to cover mainly this one, explain distinguishing features of managerial accounting. That's going to be mostly section 1. And maybe a little bit of this one. We'll see how far we go. And this is what it looks like. We got 4 main sections. Today for introduction, we're going to cover only this section. We're going to compare, you can zoom in very well, compare managerial and financial accounting so we can tell the difference of what you studied so far with what we will study over the next couple of months. Yeah, we're going to cover the management functions. You know, what's management about? You know, you already study management? You take a course in management? Yes. So you should know, you should be familiar, should be very quick and very easy. Number 3, maybe some organizational structure, and probably we're not going to cover much or a lot about ethics. Ethics is about businesses lying, businesses cheating their employees, and especially businesses cheating their customers, right? That happens a lot. We're not going to worry too much about it. Next time, we're going to begin doing some hard work. Managerial cost, product cost, period cost, when it gets the real work done. This is today only simple introduction. Okay. So what is managerial accounting? A nice, good, clean definition is a field of accounting. So accounting has many different fields. You got special tax accounting, you got auditing, you're familiar with financial. So you got many, 6, 7, 8 different fields of accounting. Now this is the second most important field. This is a field for which you can easily find a job in a mid or large business. Okay? Is a field of accounting provides economic and financial information. So it's about information, it's about knowledge, it's about data. For managers, okay? So the main purpose is to provide information to managers. Of course, as I already mentioned a few times, to make good business decisions. Okay, so number 1, it includes explaining costs. Cost means how much money we spend. Okay? All right? And you have manufacturing and non-manufacturing costs. Next time I'll be explaining which are manufacturing costs, which are non-manufacturing costs. Okay? So, its most important part is about costs. How much it costs. So you're running a coffee shop, right? And you're running a coffee shop. How much the coffee cost? Okay? Does it cost 2 baht, 3 baht, 5 baht? Okay? Good businesses, if it costs 5 baht and you sell it for 25, right? How much is this one?
30.
Okay, so it's 30. How much does it cost to the business? 5? Nah. It cost them probably 5. So it cost them 5, they sell it for 30. We call this good business. Right? So, their managerial accountants will know how much it costs them to make one coffee. Well, where's the other one? Well, this one turns out to be a very, very, very good profit. It takes less, this little Nescafe being one you all are buying. It usually costs to the business 1 baht, less than a baht. Okay? But they sell it for how much? Maybe they sell it for 5, right? But that's a good business. You make it for 1, it costs you 1, they sell it for 5, you get a big profit margin. You see, not profit, profit margin. I'll be explaining that soon. Okay, so you also want to know what's the cost of providing a service. So, the university wants to know what's the cost of teaching you. And the cost of teaching you includes not only my salary. The cost of teaching you includes a little bit of this coffee, maybe 1 baht, okay, which I drink. It includes this marker, maybe 2 baht, okay, or 5 baht, which I'm going to use. Cost is of air conditioning, electricity, right? This is the cost of teaching you, right? Oh, there's also cost of electricity to run the screen, to run the projector, to run the computer, and also electric cost to run the camera. Well, there's also cost to clean the room, right? So, the university has a lot of costs. It's not just my salary or the salary of the secretary, okay? This is a small cost of running a university. Outside, you got a yard, you got trees, you got a lot of other things. So, you want to know how much it costs to provide a service, okay? You need to know all the costs. Next one, you want to know the behavior of costs. If we have 2 more students here in class, is it going to cost a lot more or not? It's going to be more expensive to have 2 more students? No. It's the same salary, the same desk, the same electricity, the same camera, almost the same everything. There'll be a little more cost when it comes to the midterm, and we need a little more paper for the student to write the exam, right? But the cost of 1 more student is little. Okay? So, you need to know the behavior of costs, okay? Same thing in a movie theater. In a movie theater, you're running a movie, okay? If you have 5 more customers, does it cost more? For a movie? No. Or what about coffee? Does it cost more? And yes. Every customer will need some of the coffee, some of the ice, some of the cup, some of the straw. You need a lot more. So you need to understand the cost of your business in order to make good decisions. Okay. So these are all managerial accounting, and this is what you need to do. And this is the chapter what I was telling you. It's called Cost, Profit, Volume Analysis. That's chapter 11, 22 or 23. We're going to cover later down the road. Oh, even more. Managerial accounting is about assisting management to plan for profits. If you're running a business, you want to know, how much do I expect to make it this month? Or how much do I expect to make next month? How much do I expect to make in 2 months? Next year, how much profit you want to make? Or expect to make? Is it $500,000, $1 million, $2 million, $3 million? Okay. So you want to know and plan what your profits are, and based on your profits. Same thing here with students. Are you going to have 50 students in your program, or 60, or 100, or 200? Why? If you're going to have 300 students instead of 50, you need to hire 3 more teachers, okay? Oh, you're going to need 3 more classrooms, okay? So, if you want to plan your profit, you'll need to know how many customers you're going to have. And then you need to plan for everything else. For the cups, you know, for the straws, for the coffee, for the classrooms, for the teachers. You need to plan everything else. So, it is a lot about planning and about budget. Budget means a financial plan. Budget means how much money we're going to get. You call this money coming in. And how much money you're going to spend. This is money going out. So a budget is about money coming in and money going out. You want to make sure that you don't run out of money. Okay? So this is a budget. So a very important part is to budget. Alright? I mean, it's not going to be a good idea if the university runs out of money, can't pay my salary. Right? If you don't pay me my salary, next month I'm not going to be coming to teach, right? And then it's a big problem. Okay? So the university or any business cannot run out of money. Like it can't run out of cups. You run a coffee shop running out of cups is a big problem, right? So you all understand that. Okay, so you need, if you're a business, you need to control costs. To control cost means to keep costs low. When you run your business, you don't want to spend a lot. You want to spend as little as possible so that you can make as much profit as you can. The only way to make big profit is to keep costs low, okay? Profit is the difference between the revenue and costs. Well, these costs in financial accounting we call expenses. Okay, that's coming next time. So, you want to know what the costs are and respectively expenses. I'll be explaining the difference between a cost and expense. And you want to compare. Hey, this is what we planned and this is what's going on. For example, they plan to have 100 students, and each student paying tuition, right? And actually they got 93, okay? So they have 7 students less than planned. Or maybe they planned for 90, they got 93, got 3 students more. So you want to compare your budget for your revenue with what you actually got. And you also want to compare your costs to say, hey, we're spending a lot more money on electricity. What's going on? Okay? Or we're spending a lot more money on teachers. What's going on? Okay? So you want to check to make sure you're not spending too much money. So you compare what you actually spent against what you plan to spend. So we're going to have a plan for profit means you're going to plan revenues, then plan expenses. You want to see where the problems are. Next one. Let's see. Accumulating and presenting data. This in business they call it reports. So you want to have what's called an internal report. You give to management report about revenues, our customers, our profits, about whatever management needs. So, managerial accounting is about presenting data, and again, I'm repeating it for 10 times already, for management, decision making. Everything is about making good business decisions, okay? So, this is what managerial accounting is, and these are some of the main activities. Alright, explain costs, compute the cost, okay? Behavior of costs, so everything's about costs, okay? And back in the old days, and then you got some budget, cost control, and cost reporting costs, okay? So, back in the old days, 20 years ago, or 24 years ago when I was studying accounting, back in the old days they called it cost accounting. That's how they called it. Then there's a little difference, they call it now managerial accounting, which is cost accounting, and a few other things. Here in managerial accounting, we'll study mostly cost accounting. 80% of it is just cost accounting, okay? How to account for costs. All right, let's see what else we got here. Okay, this is a nice comparison. I guess you'll be zooming in a lot, right?
Yeah.
Comparison between financial accounting and managerial accounting. And the first comparison is by type of users. Who are the main users? Already covered in the introduction. The main users for financial accounting are external users. Already covered. Stockholders, we call these investors, creditors, regulators, government. Here in managerial accounting, it's mostly company officers and managers. So these are mostly internal users. Next one will be times and frequency of reports. For financial accounting, usually financial accounting are quarterly. Quarterly means every 3 months. And annually, meaning once a year. So I got small reports every 3 months, and I got a big, complete, comprehensive annual report once a year. For managerial accounting, you make reports as often as necessary, as you need them. So, you make them as frequently as needed. And these are internal reports. So, the users are internal users, the reports are internal reports. These are external users, and the reports are external reports, okay? When you create an internal report, these guys don't see it. Okay, the external users don't see it. So, what's the purpose? The purpose is general purpose for thousands of investors and everybody. And these are special purpose. They are very specific. They want to know specifically about the coffee. They want to know specifically about the tea. They want to know, oh, we got coffee and we got tea. Should you have the same price or a little different price? Is coffee more expensive or is tea more expensive? Okay. Are we spending too much money on sugar? Okay, so you want to know special questions and you need special reports for special problems. So, you need specific decisions to make. Okay. Should we raise the price of coffee? Or maybe we should lower the price of coffee, right? For example, instead of me going out and paying $30 for coffee, right? What I do is I bring my own. Because I'm cheap, right? I pay only $5.95 for the 7-Eleven, right? And I know what I get, okay? So that's a simple example of cost control. Well, I can't get my own meal, so when it comes to lunch, I'm going to go outside and eat, right? So, next one is the contents of report. The contents of report here is about the business as a whole. We also say something else. It's also standardized. financial accounting is almost the same, almost everywhere in the world. Okay? So, it is highly aggregated. You got, in a small, just one page, you got a lot of information. So, it is highly condensed and highly aggregated. And it's also mostly double entry. Double entry, debit, credit, okay? And finally, it is generally accepted accounting principles. We use certain principles almost everywhere in the world, and they're the same principles, okay? So, you gotta have certain standards. And here, managerial accounting, it is about certain subunits. Well, how much is cost the international management program? Or how much does it cost engineering? How much does it cost, let's say, languages? So, how much does it cost to make coffee? How much does it cost to make tea? Managerial accounting usually provides very detailed report. You want to know about every single product, how much it costs, okay? You want to know every single employee, how much they cost, how much they get, okay? So, it's way beyond double entry. So, any information that can help you make decisions. Relevant means useful, and you can use it to make decisions, okay? Any information. And finally, again, the standard is it relevant to make, is it useful to make decisions or not? If it's useful to make decisions, it's part of managerial account. If it's not useful to make decisions, you don't need the information, okay? So, that's what managerial accounting. And finally, verification, financial accounting, the information is, we say, audited. Audited means check if it's correct. Here, there is no audit. There is nothing here, okay? This is internal use, no audit, no check. Usually, the manager, CEO, will check to see if information is good or information is not good. You guys having fun? Yeah. Okay, let's see what's next slide. Because you guys getting hungry? Not yet?
Very hungry.
Very hungry?
Yes.
All right, close soon. We got a few more slides. We need to finish the chapter. Okay, so again, some questions, some answers. Don't want to do that. Not very interesting. Okay, managerial accounting, emphasis on special purpose information. Okay, we get to the functions. You already studied this in your management course. It's very simple. It's very easy. Management has certain functions. The first main function is planning. If you're in business, you want to have a plan. You want to have a business plan. How much money you're going to make, many products you're going to sell, which products you're going to sell, what price you're going to sell, what's going to be your total revenue, and then you want to have a plan for the costs and expenses. Well, you're also going to have a lot of plans. So, you need to plan about the people, how many people we need to hire, okay? So, that's a human resource plan, okay? The financial plan is about money coming in and money coming out. We call it a budget, okay? So, budget is one type of plan, but you need other different types of plans, okay? So, planning requires to look ahead into the future. You need to establish your goals. You need to see what your short-term profits. So you want to plan your profits, okay? And then make a budget, okay? Oh, we're going to need so many students. We'll need so many rooms. We're going to need so many teachers, okay? And also about market share, that's marketing. I don't want to do this now. Yeah, this is sometimes, sometimes not. Making a commitment to environmental protection. In other words, whatever your campus is, you want to keep your campus clean. You want to keep your water clean, okay? You don't want to have coffee or tea with the water, right? You want to keep your air clean, okay? These are basic things. And maybe a business will contribute to some social programs. Maybe they can hire, well, they can get 5 students from very poor background to study for free, okay? Or if someone has a special problem, whatever the problem might be, health or other problems, they say, okay, whatever, you know. So you want to have some social stuff, I don't want to do this, but I can spend time here. So that's the planning part. The directing part is about organizing and leading. You want to organize the business. You want to have departments. If it's the university, you want to have the mathematics departments, the physics departments, the chemistry department, the engineering department, right? The language department, business school. If you have a business school, you're going to have management, you're going to have marketing, you're going to have accounting, you're going to have finance, okay? So you want to have what's called organization and structure, okay? So, directing is about coordinating activities between different people. So, me teaching, secretary doing something else, somebody else has to plan the rules, right? Somebody's got the plan and say, we're going to have class on Monday morning from 9 till 12. Is this good enough? No. We need the room. Right? So, not good enough. They got to say, in room 506. Okay? You understand the difference? So, we need somebody to organize things. Say, we're going to have class in this room from 9 to 12. Okay? And this means you have no other class than accounting. You can't have 3 classes at the same time. No? Right? So this is part of called coordination, to make sure that you have only one class and that you have the room and that I'm available to teach. Okay? So directing is about actually implementing, meaning getting done, getting the job done. You got a certain plan, you want to done it, okay? So we already planned 8 chapters, and we already planned to have 15 weeks, okay? Now it's about coming to class, and week number 1, I teach you. Week 2, you solve homework, and we do problems, okay? So we got a certain plan. It's about working, getting the job done, okay? It's like you plan to go on the stadium and run for 30 minutes. Well, then you need to actually put your tracksuit and actually run 30 minutes, right? It's getting the job done. Your shortest plan is go eat, right? Right? So, again, it's about getting it done. You go, but you need whatever, 30, 40 baht to pay for the lunch and eat, right? So, it's about implementing. Another thing is about incentives and motivation. So, studying in class is good enough, but there's got to be incentive for you to do your homework. And part of it is getting 10% of your grade coming from homework, okay? Getting 10% coming from quiz. So, no matter what you do for any business, businesses work with people. And people need incentives. You need to make them want to do it. You want to study? Well, maybe you'll study more if your parents say, we'll give you 10,000 baht if you get A for accounting, right? Right? You're going to study a little harder. If they say, so they have 2 courses, and for one course they say, we're going to give you 10,000 baht if you get A for this course. But you get 0 for this course, right? So, is it possible you're going to study a lot harder for this course where you're going to get 10,000? Yeah, okay, well, that's called an incentive. You give something to the person so he can want to do more of it, okay? So, business and directing is about motivating people, trying to make them do what you want them to do, trying to help them do, okay? Next one is you need to select executives. You need to get good managers, okay? You need to get good people. So, you gotta get the people and you gotta get them to work, okay? And again, it's about appointing managers, supervisors, and finally hiring and training employees. So this whole directing thing is mostly about employees, executive managers, employees. It's about people. So this function is mainly about people. Controlling is, let's see. Control number one is you want to compare, the first part of control is you compare actual, what really happened with a plan. You want to say, we planned this, did we get better or did we get worse? And if we get worse, we always want to know why, right? What went wrong? And then you want to say, well, whose fault is this? Your fault or my fault? Or, you know, whose fault is it? If things go wrong, you want to have what's called responsibility. You want to find out whose fault it is. Maybe it's nobody's fault. Maybe it was just raining and raining and raining and raining, right? That happens a lot when I was in Phuket during rainy season. Just raining and raining and raining. And tourists don't go out. They don't go to the restaurant. They don't go anywhere. They don't go for a massage. They don't go for a bit to the beach. So it's raining is bad for business, okay? It's not your fault or your fault. It's just raining, okay? Sometimes it's nobody's fault. Maybe there's an earthquake, okay? Or a tsunami, right? So, you controlling is about, you know, again, here, deviation. Did you do more? Did you do less from the objective? And you decide what changes you need to do. In other words, it's called, in English, corrective action. If there is a problem, how to fix the problem, right? So, example, half the students don't come to class with homework, all right? Well, that's a problem, okay? So, how to fix the problem? Well, we take record. Has homework, don't have homework, okay? If you don't have half the homeworks, you fail the course, right? That's a good corrective action. Is it okay or not okay if you fail the course? Well, you're going to come next semester, you're going to learn it again. Right? No big deal. Well, you see, it's a corrective action. Corrective action is, first, there's a little penalty for missing 1, 2, and then there's a big penalty for, you know, for an employee. If the employees don't come regularly, you just fire them and say, leave, don't work here, all right? So there has to be some sort of corrective action and maybe penalty, but in general the question is how to fix the problem. So management is about planning, directing, and controlling. All right? Let's see what else we got. Okay, there's some other stuff. Here it's just a question. You will get it on there. Management insight. Okay, let's get the insight. Okay. What's organization? So businesses will have organization. I'm not going to spend a lot of time. The owners are the stockholders. We call these investors. Okay. And then they got a board of directors. They choose board of directors, maybe 5 or 6 people who will oversee the business. And these people will choose chief executive officer who will actually run the business. He's going to go there every day and see to make sure that everything works okay. Sometimes it's a small business, and the owner will be also the board of directors. He's going to own a little restaurant. He's going to have only 3 people, and the owner will also be the executive. He's going to run the business. Okay, so he may hire somebody else to run it. He may run it for himself. And then you're going to have different things. You're going to have a marketing department. You're going to have finance and accounting department. You're going to have operations department. You're going to have human resources, depending on how big the business is. Okay? And then you have some special departments if it's a hotel. You have different special departments if it's a university. Okay? And with an accounting, you got 2 people. One's called treasurer, controller. That's financial accounting. I don't want to go into that. We're not going to discuss a lot of business ethics. Very quickly, businesses in America, as well as in our home country, Bulgaria, businesses like to cheat. They like to cheat investors. They like to cheat the government. They like to cheat their customers. Many businesses don't like to work honestly. They prefer to cheat. It's part of the real work. Okay? And it's, you know, you have to decide, are you going to be an honest businessman or are you going to be cheating everybody else? Okay? And, you know, there's some, it's called fraud. Fraud is the same as cheating, illegally cheating your, you know, the other people, customers and so on. And all the other things, I don't want to do this. This is America. Business ethics, okay, some proper incentives, we don't want to do that. Now they have code of ethics, you know, you're going to lie, you're going to cheat, you're going to come on time, and all the other things. I don't want to do this. This is not part of what we do in this course. And I think we are done with the basic introduction. Next time we'll get to costs and we'll continue from, somebody's got to take a little note. We're going to continue from slide 17 till the very end. I'll cover it in about 2 hours, okay? And then we're going to have a simple example. It's very important for you to get to learn. Let me just see if I have this over here. The book chapter, let's say 19. Can you see how chapter 19 goes? The most important part for you to see here is the so-called business ethics. Okay, let me see, it's called, the section called Do It. Okay, you see here how they have Do It. So, it's very important for you, we're going to do this in class, is examples. It says the bicycle company has these costs, tires, advertising, factory, wheel, whatnot, all of these things. And then the question is asking, classify each cost. Let me make a little big, right? Let me see how I make a little bigger. Is it plus? I missed it. Chapter 19. Where's the Do It part? Okay. Well, here's one Do It. You know, they just give you a question. Indicate whether true or false, and then have the answer. Let's try the next Do It. Okay. So, a bicycle company has these costs, true, tires, whatnot, yellow. Classify each cost as a period or product cost, okay? So you gotta say, oh, this is a period cost, this is a period cost, this is a product cost, this is a product, that's for next time. For you to understand is that you recognize this Do It section, which will give you a simple example. And the best part is you get the solution. And solution says the period costs are the office utilities expense and the enterprise. Okay? So, we will do some examples in class. Okay? So, we first do some theory, some basic explanation. After that, we go through the examples in the book. Okay? And the next time, we're going to do the homework at home, and then we're going to solve the homework over here to make sure that we got it correctly. Okay? Let's go practice and exercise. You're going to see the chapter at the very end usually has, it's very important, a big problem. So this is the following information which is available: raw materials, work in process, whatever happens. And this is what happens, and here is your solution. They show you how to do it, okay? So this is the most important part for you to learn. You actually see how it's done in the example, and then for the homeworks, and for class, and for the exam, you do it in the same way, okay? All right? And usually every chapter will have one very comprehensive problem to solve, which covers the whole chapter. Let me see where it is. Okay. So, you see, they got some stuff. Again, do it. And this is the one I'm talking about. They call it in English comprehensive. Comprehensive means it covers the whole material from the whole chapter. Okay? So it covers like everything. So this is what it is, this is what the rent is, this is what the insurance, these are the raw materials and all the other things. So for you, it's very important that you look and keep track of these examples, and then they give you the answer. This is the solution, this is what the solution looks like, okay, for you to know and understand. Okay, they give you the complete solution of A, of B, of whatever. And then they have comprehensive problem 2. Do it, number 2, so that 2. Is it fair today? Did you have enough for today?
Yes.
Hungry?
Yes.
All right, good enough. I'll see you next week. Next week we cover all of chapter 19. And then the week after, you have to prepare homework for chapter 19. Okay? Bye-bye.